Hi, everybody. This is Hyperwave. We went live as soon as possible when I saw that live comment that I was going to get thrashed over the reef in that thumbnail. Absolutely not. I'm actually a pretty wicked server, so that's not correct. So we had to go live. Yeah, so this is going to be very interesting. Sorry for the more spaced out vlogs, but as you guys know, and I'm going to have Tyler explain a little bit more, we have our webinar coming up on Consensio. Also streaming still from Chicago. We'll be back in DC tomorrow. But at least we get a full Hyperwave video out today, and I will be looking for QA. So, Tyler.
Great. Hello, everybody. We want to just talk briefly. This will be 30 minutes. Leah's got to run to a hotsy-totsy dinner tonight. And a couple of quick announcements. We're going to do a vlog tomorrow on mutual funds, and most people's eyes glaze over when the subject of mutual funds comes up, but I promise you it will be very, very interesting. I haven't talked too much about it, but there's probably 3 or 4, maybe 5 things in my life that I think I have become as good as anyone in those things. But probably the one at the top is not technical analysis. It is understanding mutual funds. And I'm going to explain why and how almost everyone on Wall Street and most investors, which is 40% of everyone living in America, owns mutual funds in some form, but very, very few people know what to do with them or how to do anything with them or which ones to buy and what time to get out and how you get out and all of that sort of thing. That will be tomorrow. We will send out information on that. It'll probably be an hour long. It might run a little longer than that, but I think you'll find it very interesting. And from that one, we may or may not do a webinar going into much more depth. And we will decide that after hearing your responses about our mutual fund blog. We will then do one on ETFs, where we will go into a lot of detail. Once again, I jumped on the ETF bandwagon all the way back when the first one came out in 1993, and I've been studying them ever since. I keep a notebook of every single ETF. There's over 3,000 of them, and I've got them broken down in all kinds of categories, and I want to share with you why and how, and the best ways of using them and how to pick them and all of that sort of thing. So that will be coming up probably early next week. As Leah just said, our webinar is on October the 12th on Consensio. It's going to go into much more detail than our 2-hour vlog on Consensio that a lot of you really enjoyed. But we're going to go into things that we haven't talked about before that will be very important for laying the groundwork of decision-making with Hyperwave, but also with Bitcoin and with all of the stock markets and things that are going on in markets around the world using Consensio. So finally, our webinar is actually filling up very, very quickly, a lot more quickly than we expected. I'm glad that we put it off till October the 12th to allow as many people in as possible. There are some cutoffs. We're not sure what they are exactly on Zoom, but we are going to quickly fill out our space on that. So if you have not had the chance, please just go on to our website, lucidfunds.com, and just say you would be interested in learning more about the webinar, what will be included, and that sort of thing. As quickly as you can, we will mention it again. But now let's go right to the topic of the day, which is Bitcoin and the technicals of Bitcoin. I did one on Consensio and Bitcoin not too long ago, but we want to take a look at some more things. Things are getting dicey once again. The price has been easing back down into the 63 range. Tone did an excellent analysis using the sequential earlier this morning that if you haven't caught, you should. I'm going to be going into the indicators that I use. And with that, we are going to jump on screen share and we will take a look at the Bitcoin Hyperwave running, in this case, from $592 over on the left up to almost 20,000. And then this series of lower highs, 1, 2, 3, 4, 5. Tone said this morning he believes this was 6. He's probably correct. I think it might be too early to make that call, but we will probably know in the next 24 to 48 hours if we've only got a 2-candle top here, and now we're headed down again. So let's explore price action on a weekly basis, starting with our stop and reverse points, showing that since the top at 20,000, we've only had a 4-week reprieve where we ran up to the $8,400 level from 6,000. And that gave us 4 weekly dots of support that have now deteriorated back to the negative side for the last 7 weeks. And you can see we are nowhere near turning that around. We've got to get up to almost 8,400 to reverse that. That is a major negative for the Bitcoin market, which of course means that's a major negative for all crypto. On this little bounce that we've had for the last 2 weeks, the altcoins did better than Bitcoin in general because they had done much worse than Bitcoin as we dropped down from that previous peak, and much worse when we dropped down from this peak. And they are beginning to do much worse again just on this one candle that we've got on a weekly basis. So that is what we expect. That's what we expect if prices break down from here. And with that, we will move off the stop and reverse and look at the Bollinger Bands. Once again, the top band is moving down very sharply. The bottom band has begun to move up, squeezing the price. At the current level, the bottom band is sitting just about exactly on my phase 2 hyperwave line. And when we get 1, 2, 3, 4, 5, 6 weekly attempts to break through the middle, and it can't do that, the probability increases that we go down at least and touch the lower line, but probably break through it sometime during the week where the penetration takes place. So that is also continuing to be negative. The moving averages, the 2, 7, and the 30 week that I use, I will quickly just take off the price so we can just look at what the Consensio moving averages are doing. The long-term moving down quickly and accelerating now. The short and the intermediate term are flattening because prices staying right about where these prices are, these moving averages are. Putting back the price, you will see that we are actually cutting through at 64.05 right now, both of those moving averages. That's not enough to turn them down, but any further drop in price from here will turn them down and put us back into a full-blown bear position relative to the Consensio moving averages. Okay, let's close out those. Take a look at the RSI. Tone did a lot of analysis on RSI this morning. I agree with him that at all time frames, this is not looking bullish at all. We've now got 3 peaks lower than the previous one, and we are headed down again. My belief is that we have to break down through 30, and I believe we will see much lower than 30, down at 25 or even 20 before we see capitulation. And we are a long way from that. We're around 45, 44.8 right now on the RSI. So that also is negative. Let's take a look at the MACD. The MACD isn't telling us very much. It has gone positive barely this week and last week. It was negative barely the 2 previous weeks. It was positive barely the week before that. And then we have this very long string of negative histograms. Basically, I would call this neutral at this time frame. So what we're looking at is on the weekly basis, we have we have 5 out of 6 of the indicators that I use to determine trend and current day strength, neutrality, or weakness, and we're coming down very hard, as we have for a long time, on the negative side of the picture. This is the 12-hour chart, and the 12-hour is showing a lot more movement. Tone is pointing out how powerful the sequential system has been on this 12-hour chart, and we've still got another 3 or 4 periods to go, which will take us well into tonight and tomorrow and to tomorrow night of weakness to get the next possible bounce. Now, if we can hold above this 6,200 level, where we have been able to hold going all the way back to September the 8th, we could get a short-term bounce that might get up as high as 64 or 6,500, but then we start the whole countdown again, and that does not look very pretty. On the very short term, I've been watching the 30-minute very closely, and we do have a bounce going for the last 4 hours, but it isn't able to really muster any strength above 6,400. And now we're beginning to run out of time on the shorter time frames, although we do have the MACD beginning to move up. And I will just throw on the stop and reverse points, which alternate frequently, and now are showing a little bit of support with 5 30-minute periods supporting the price. We need to get below approximately 63.45 to turn that around and begin a series of negative stop and reverse points. But so far, we've been able to hold above them for the last 2.5 hours. I just wanted to take a look because I haven't seen on the daily where that stop and reverse is. Yep, we were able to break through the downtrend from the 7,500 level with that 4-day pop that then ended, and now we're coming down fairly quickly. We need to break approximately 6,200 to turn the stop and reverse points negative on the 1-day chart. And on the 3-day chart, we are negative, just as we are on some of the longer time frames. We had one period about 24 days ago, September the 3rd, but it only lasted for one candle. That candle that ran up and got up to almost 7,500, and then it reversed on a 3-day basis on the same candle and came down and broke the bottom stop and reverse point. We've been negative ever since. I think the 3-day is a very strong indicator of swing trades. As you see from the top, it took us all the way down to the bottom here with negative stop and reverse points all the way down, including this big run up to 11,700. That was not enough to turn us around. We then got the swing from 6,000 up to this peak at almost 10,000 with the support of the stop and reverse points. All of the negatives from 10,000 back down to 6,000, then support to the the $8,400 level. But this has been one of the longer periods with only one candle breaking it before we went negative again. To break this, we need to get back up to 7,300. Otherwise, we are still in a very consistent 3-day downturn. And with that, I think I will get off of screen share and see if Leah has received any questions that we might want to take a look at.
All right. You ready, Ty?
I am.
So we don't have any questions, so I get to have fun with you. Ready?
Okay, great.
Personally, curious about this. So with this, all the FUD around the very serious bug in Bitcoin, if anyone was watching the Honey Badger conference, actually was streamed live. Why do you think it didn't have a bigger effect on Bitcoin price?
That's a great question. I can't get out of screen sharing here. Now I can. Okay.
So yeah, just simply huge bug.
Yeah, which button do I push?
Yeah, you're off. We see. Huge bug, big deal. Why not a bigger deal on price? Question.
I'm not sure. The market has been absorbing some pretty darn bad news for the last week or two at a lot of levels. And not only all kinds of hacks and stuff. I'm getting the impression that people almost expect bad news at this point. And it's been factored into price. And what I mean by that is the net longs, net shorts that continue to, even though the net shorts are being covered at a fairly low rate, they're still very high relative to net longs. So just psychologically, I believe that the shift is taking place where people aren't reacting to either good or bad news by running in on price. We're seeing spikes up that only last a very short period of time, and they're usually not news related. They're whale related, or they're large institutional buying related, or they're covering shorts related. It's like when Novogratz called a bottom, absolutely nothing happened. whereas before, if that had occurred back in January or February or March, I think there would have been a much bigger reaction. And we're not getting big reactions to negative news it's really bad news. It's bad news for developers. It's bad news for people that were expecting that the possible bugs in the coding had been taken care of. And now there's a debate, have they been, or have we just kicked the can down the road further? So I think people are getting to be immune to news items. And now that means that price and technical price, like we just looked at, is becoming more and more important in terms of being able to call where this market is going.
I like that. Thanks, Ty. So the halving. I'm gonna ask you about the halving. We haven't talked about the halving before. Why is 2020 halving not priced in yet? And when will it start getting priced in? What are your thoughts?
Well, I've looked at the analysis that a lot of other people have given on previous halvings, and we're still very early into that expectation taking over. So I would expect that we've got to get to a bottom first. We're still only in 2018. We've got to get all the way through 2018 and all the way through 2019. And I think we will do that. I think we're going to find our bottom somewhere in the next several months, or at the most by the spring of next year, which will still be a long ways away before the halving takes place. Then I would think we've got the ability to build quickly as we get closer and closer to that halving. I think it is really an event that carries a lot of weight. I'm not so sure the other ones in the past have carried as much weight as this one does, because there were so many fewer participants during all of those previous halvings. And this one is weighed down by the crypto space. The previous ones were not. The previous ones didn't have nearly as many competing tokens, ICOs, and alts as we have today. So this is a different halving, and it would be great if we could clear out of many, most, or all of the competition as we arrive at a bottom. Then I think we could see this halving become very, very significant.
Thanks, Ty. Yeah, and Safedin and everybody talks a lot about the halving and the importance, especially in utilizing and the switch over to store of value. So I'm appreciative that you shed some light on that. Okay, so we have a Consensio teaser question.
Great.
So in what kind of markets is Consensio most effective? Because it seems Consensio is getting in bull markets late and getting out of them late, so a lot of missed gains.
Yeah, the best signal from Consensio is when all three of the lines are going flat, because that means absolutely nothing happens. You should go on vacation. And that can last for weeks, months, and sometimes even longer. That's where it's the most effective, because it keeps you out of things you want to do, either long or short. It just says there's just not interest in the market at this point. Then when you get out of that flatness, that becomes the next important thing, if it's either up or down, because yeah, Consensio will get you in late, but not very late, particularly if you're using very short-term, short moving averages like I do. A 2-period moving average will get you thinking very quickly. In terms of being fully in or fully out, you don't do that with Consensio. You do it incrementally. That's the way it's designed. It's designed not to make mistakes and get you in and out of moves as the market swings, but rather get you incrementally in to a trend. And once you're in that trend, staying with it for months, quarters, or years before you have to make another trade. Then finally, whichever direction that trend has been going, it becomes very effective keeping you in until the evidence builds that there's a trend change. So there's really 3 parts to it, and we're going to go through each of those parts in great detail on October the 12th.
Yeah, and for anyone who, if you go to the website, our website, lucidfunds.com, fill out the contact form, and I will personally send you an email actually with the full description of what the Consensio webinar is about. So hope that's helpful. Ooh, we're going to kind of get a bit of a sunset.
Great. And we've got 7 o'clock our time, 6 o'clock your time. You've got to be moving on, but if there's maybe 1 or 2 more questions, and then we'll end it.
Yep. Let's do one last one. And correct, I have a steak dinner. If anyone's been to Chicago, I'm going to Lowry's. So yeah, it's more carnivory here.
Yeah, that's as good as it gets in Chicago. Everybody knows, I think by now, that I was born and raised in Chicago, and right in Hyde Park is where I was born. My parents lived there for a long time. My father was with the American Bar Association, whose headquarters was right across from University of Chicago in Hyde Park. And they moved years later, but then we moved to the outskirts. But I know and love Chicago, and Lowry's is as good as it gets in terms of steakhouses.
Thanks, Ty. Yeah, my family's from Chicago, for everybody here. And we like our steaks. So, okay, if Bitcoin breaks this 6,000 strong support and it becomes resistance, would it be able to break the resistance in few attempts? Question, would that cause the catastrophe and create a panic? Question.
Yes, if we break 6,000, it will be resistance, but we could easily break it to the upside, but not before we have tumbled below the phase 2 hyperwave line and tones 4975 and 4800 on the Fibonacci last line. I believe all 3 of those lines will break before we can get back up to 6,000. If we break them, turn around that week, and close back above the phase 2 line, we have a very good shot of breaking back up through 6,000. But in my opinion, that will not be an important break. Once a line like that is broken to the downside, it's much easier to break it back up to the upside. And we could get as high as 7,500 on that kind of a run before it turns around and then retests the phase 2 line of a hyperwave, and maybe retests it on a number of occasions. And I will have my fingers crossed throughout that whole period that it's able to hold. As you know, I don't believe it will, but it has the possibility of holding. Awesome.
Last question. What backtesting tools do you recommend apart from pen and paper?
Well, it depends on what you're backtesting. If you're backtesting a system like the sequential system, where it's all computerized now, it's very easy to do. And almost all technical indicators, it's very easy to do because it's all been programmed in things like TradingView and stock charts and a number of other charting techniques where you can go back and you can actually test theories out and see how they worked out. There are also a number of computer programs that allow you to test your own hypotheses, come up with your own trading system, and there is software that you can get. All you need is a data stream, and you can change the parameters and go back and test. Now, we tested Consensio on Bloomberg using 25 years of data that Bloomberg had stored and gave us access to optimize how Consensio works on a very short time frame for trading ETFs, literally minute by minute. And then we used all of that hypothetical backtesting to design a hedge fund, which we ran for a couple of years. So that's the process you go through in order to backtest any theory. Unfortunately, that has not been developed other than the one that we did for Consensio for Hyperwave, but we've got a team of people beginning to work on that, where we can go back into history and apply various rules to optimize all of the different phases. We will be talking a lot more about that later.
All right. All right. Well, I'm asking one last question. Where's your favorite deep dish?
That's a great question. I hate to say it, but Uno.
You did not just say Uno's.
Is actually started in Chicago, and there are a number of private places that have great deep dish, but I usually go to Uno in Chicago, right downtown in the Loop, because it's pretty spectacular.
Oh man, mine's Gino East.
Gino East is fabulous. Yeah.
Maybe because you can write on the walls.
Yeah, that's great.
Who knows? All right, everybody, you heard it. I don't know if you want to watch our channel anymore. Tyler did say his favorite deep dish in Chicago is Uno's, but thanks so much for watching. Again, Consensio Workshop, October 12th. If you write into our website, so lucidfunds.com, it's in the bio or description, if that's what it's called, in this YouTube video. Fill out the contact form. You'll get all the information about what's on the webinar and how to pay and all that good stuff. So until next time, thanks, Ty.
Great. Thank you all. Bye-bye.